What is the secret to consistent cash flow? Our minds immediately want to say, well, consistent sales. And I'm here to tell you it's not just about sales. My name is John Briggs. I'm author of the 3.3 rule and the 3.3 system, where we help business owners extinguish burnout, regain control of their lives, and create an intolerance for unconscionable work hours. We believe in work-life harmony. We want people to be home with their family more. We want them to have a life outside of work. So with the secret to consistent cash flow, I understand why sales is the first place our minds go, because look, there's truth to the fact that if I don't have consistent sales, I don't have consistent cash flow. But that's just part of the equation. That's just money coming in. You know, if we think about this sales industry, so an industry that exists to sell people on hiring them to help you with your sales, it's massive. It's a $1 billion plus industry, probably multiple billions. Even for our clients, because I get this CPA background, own a tax firm. Most of our clients don't want to do anything. They don't have anything to do with their financials. But all business owners get sales. They understand that. And it's easy for them to understand, if I spend this money on these people who say they're going to help me with sales, they can track that. Like, there never seems to be any pushback that I see on that side. Again, it can't just be sales. I worked for a company one time and their only goal was to sell. They paid zero attention to all the other things in the business, which I'm going to tell you about. But because they just focused on sales, I remember I went to them one time and I created this thing. Oh my gosh, it was so sexy. And I presented it to them and I'm like, hey, here's this weird thing. It's sweeping the business community. A lot of business owners have put it into place, and I think if we put it into place here, it's gonna revolutionize our business. It's called a budget. And they're like, John, we don't need a budget. Good grief. We'll just sell more. Whatever that costs, we'll just sell more. Well, the company did $30 million in revenue, close to $30 million in revenue. The same year, they declared bankruptcy. The same year, team members worked for them and were like $2 million plus of wages that didn't get paid because they ran out of money. How's that selling more thing working out for you now? Yeah, it didn't work out. We also recently took over another accounting firm. They were doing $12 million in revenue, and they now don't exist because we just took over handling their clients. And $12 million apparently wasn't enough money for them to figure out how to manage operations and keep clients happy. It's not just about sales. If it's not just about sales, what is it? There are some foundational things about cash flow that every business owner needs to pay attention to. The first one that I'll talk about is clients. Clients bring in the money, right? It's not just sales though. It's not just the sales they bring in. It's who are they in connection to what type of client do you serve best? Okay, this isn't a judgment of good people, bad people, good clients are good people and bad clients are bad people. This is a matter of a good person could be a bad client for your business. And so it is super important that we understand what that relationship looks like with our clients. So a very popular metric that we love to suggest here is called client profitability. Yeah, they're bringing in money, but how much resource is being spent on serving that client? And if we're tracking client profitability, we'll be able to identify which of those clients are actually using more resources than we initially thought. And if that's the case, that means we undercharge them and we're losing money on keeping them as a client. Years ago, I did a certification called Lean Six Sigma, and I met a guy in that process. He was a consultant and he was working with the manufacturing client. He was telling me how he went into that business and did some cash flow analysis on clients specifically. And he's like, hey, look, we've looked at your top 3 clients and you're actually losing money on these 3 clients. These 3 clients represented more than 50% of the revenue, but they were losing money on them, meaning they were spending more than 50% of their revenue just to serve them. And he said, you will double your profitability as a company if you just get rid of these 3 businesses. They ended up not being able to pull the trigger on that, and they went under because of it. Tracking client profitability is super important. because it's about the quality of the client. How do they mesh with what we're doing? And did we price them correctly? Because just bringing in money for the sake of bringing in money doesn't make sense if it doesn't give us a margin of profitability. The next thing to consider here when it comes to paying attention to cash flow foundational issues is the team. What does your team cost look like, your labor expense? If you have team, which I hope all business owners feel that kind of like, hey, let's grow, let's provide jobs to others. I think it's a great blessing of being a business owner. I can't just pay people for the sake of paying people though. We're not a charity. If I want to stay in business, I have to be profitable. The only way to stay in business for as long as I want to be in business is to have profit, which means if I'm paying a team member, I also need a return on that cost. And one of the metrics we like here is 4x, meaning I need that team member to either bring in or save us 4 times the amount of their cost. So if they're paid 50 grand, 4 times that is 200. So they either need to be responsible for $200,000 of revenue generation or $200,000 of savings. That's a good generic metric based on positions, based on company. You can adjust the 4x number a little bit, but you need some sort of return on your team. And if you don't, you're not profitable. And one of your biggest investments is actually giving you a loss, and you will not be able to stay in business for very long. And then the third thing is operations. This is everything else that is sucking up cash flow. These are your software subscriptions, and if you work out of a space, the cost of the space and your utilities, and you would even potentially look at your marketing spend. Certainly you should be doing an ROI on marketing. One of these things that I learned came from Keith Cunningham. He talks about a business exists really for 2 reasons. And there's only 2 things a business needs to do. It needs to get clients and it needs to keep clients. So when I'm looking at my operations and the cash flow leaving, I need to be able to ask myself and answer the question, does this expense help me get a client or keep a client? And if it doesn't, then I have bad cash flow. I need to get rid of that expense. So that's a super easy filter. Get clients or keep clients. Is my money doing that for me? As a company grows and the revenue grows with it, it's super easy to get bloated. I don't know if you've noticed this in your business when your growth periods have happened. Expenses often increase at the same pace, if not faster, than the income itself. And we don't necessarily pay attention to it in the growth period because we're so focused on the growth. A lot of times we're like, well, what's the systems? I need to increase my systems capability. What's my capacity? Like, I increase those things. I need more team because I have more revenue. And it's super easy to get bloated. So what we need as business owners is not just consistent sales. We need a consistent cash flow management system that allows us to also focus on things like the client cash flow to team members, and cash flow from operations. Boundaries. We need boundaries around our cash flow. We are a big proponent of the Profit First cash flow management system. I am a certified Profit First professional, and it's one of the easy ways to bolt on top of the accounting that all business owners are doing to give us boundaries, not just around sales, but around these cash outflows. Because a lot of times a business can become healthy not by making more money, but by actually looking at the value of their cash outflow and putting boundaries around that to make sure that their quality spends, that they're getting return on investments, and of course, that the clients we have in place are actually making us money and we're not losing money on them. I wrote a book called The 3.3 Rule, in which I talk about the 3.3 system, which goes over how to improve not just these 3 things, but other things, but it certainly tells us how to improve our cash flow with clients, our cash flow with our team members, and our cash flow with our operations and systems. So if you find it interesting, you can find a link to the book in the description below. So thank you for watching. If you found this valuable, please share it with a friend, and we'll see you in the next video.